Well, here's something that really caught many off guard. The U.S. and China have just announced they're temporarily slashing tariffs.
Yeah, quite the development.
So if you're trying to make sense of, the constant shifts in global economics, you're definitely in the right place today. We've just gone through today's reports from factoring specialist Chris Land to pull out the really crucial insights on this.
Right.
Think of this as your shortcut, kind of, to understanding what might be a major pivot point in these trade tensions.
And the source makes it pretty clear. The immediate goal seems to be about de-escalation, cooling things down.
Exactly. That seems to be the main thrust, according to Lance.
Yeah, and what's interesting, like you said, is how sudden it feels. Lehnes' report, it doesn't just cover the immediate fallout, but also gives that necessary background, what led up to this Tariff Truce Pact, as they're calling it.
Okay.
So our mission today really is to dig into the what, the why, and maybe peek ahead at what the future might hold for this truce.
All right, let's do that. This Tariff Truce Pact, what exactly is it? What did they agree on?
Okay, so the core of it, based on the report, is a mutual 50% cut in tariffs.
50%, wow.
Yeah, and it's not just on, a few select items. It seems to be a pretty broad reduction across a whole range of goods they trade.
Okay.
And the kicker is, it took effect immediately, today, May 12th, 2025, the day the report came out.
Right now. Okay. But this isn't permanent, right? You said temporary.
Exactly. That's crucial. It's provisional, set for 6 months.
6 months. And the idea is...
The idea is that this 6-month window is really meant to open the door for new high-level trade talks.
Ah, okay. Create some breathing room.
Precisely. The hope, is that lowering the temperature a bit will make those negotiations more productive.
Right. Because things were pretty heated not long ago. What drove them to this point now? It felt like escalation was the trend.
That's a really good point. And Lehnes' report actually reminds us about that volatile period, early 2025.
Yeah.
It was very tit for tat with tariff hikes.
I remember that.
Yeah. The U.S. justification for the initial tariffs was, well, the stated reasons were unfair trade practices and intellectual property violations.
Kind of the long-standing complaints.
Exactly. Things like alleged forced tech transfer, IP theft, that kind of thing.
And China hit back, didn't they?
Oh, absolutely.
Yeah.
Swift retaliation. They slapped tariffs on major U.S. exports. Agriculture was a big one, and also some critical components.
Right.
But here's where it gets interesting. The report mentions Maria Tanaka from the Peterson Institute for International Economics.
Okay.
Her analysis suggests that the actual impact of those tariffs, falling trade volumes plus rising inflation in both countries, that economic pain was a key driver pushing them towards, a compromise.
Ah, so the economic reality started to bite.
It really seems that way.
Yeah.
That maybe the economic consequences were becoming too significant to ignore on both sides.
Okay, that makes a lot of sense. Can we get into some specifics? Which goods are actually seeing these tariff cuts? Any examples?
Yeah, the report gives some key examples. On the U.S. side, tariffs are coming down on Chinese goods like consumer electronics, textiles,
All right.
and significantly rare earth metals.
Oh, that's a big one.
Huge, especially for U.S. tech and manufacturing. They rely heavily on China for those. So this could ease some supply chain issues, maybe lower some costs, though, the reliance itself is still there.
Sure. And what about China? What U.S. goods get a break going into China?
For China, they're lowering tariffs on major U.S. exports. Think soybeans, corn.
The agricultural sector again?
Yep. Also semiconductors and energy products.
Yeah.
These are areas where the U.S. exports a lot, so this could be a pretty decent boost for those American industries.
Okay. So beyond just cutting the tariff rates, is there anything else in this deal? Any mechanisms or other points?
Definitely. A key part is setting up a bilateral trade commission.
Okay. What's its job?
Basically, to monitor everything, to oversee the tariff cuts, make sure both sides are actually doing what they agreed to. Compliance, essentially. And maybe just as important for businesses, they both agreed to pause any new tariffs during these 6 months.
A ceasefire on new actions.
Exactly. That provides a bit of stability, predictability, which, businesses have been really wanting.
I bet.
The report also mentions language about further talks, things like broader economic reforms, rules for digital trade, suggesting they might be willing to tackle some deeper stuff later.
Okay, so a pause, monitoring, and a nod towards future talks.
Mm-hmm.
How did the markets and businesses react when this news broke?
Well, according to Lehnes, the reaction was overwhelmingly positive, very strong.
Yeah.
The Dow Jones jumped significantly at the open, over 500 points.
Wow.
Yeah. And you saw shares in multinational manufacturers, agricultural companies, they all got a lift.
And in China.
Similar story. The Shanghai Composite Index was up over 2%. So definitely renewed confidence from investors there, too.
So it sounds like businesses are breathing a sigh of relief. Less uncertainty.
That definitely seems to be the mood. The report quotes Michelle Grant from the U.S. Chamber of Commerce.
It's basically saying, yeah, relief from the tariff and predictability, and maybe, just maybe, investment could pick up again.
Okay.
And we're seeing similar positive vibes from Chinese exporters, too. Their Trade Promotion Council is apparently calling for, long-term cooperation. Seems like a broad hope this could lead to something more stable.
But there's always a but, isn't there? The report cautions this might just be temporary. What are the big issues still lurking?
That's the million-dollar question, isn't it? It's the critical thing to remember. James Rothman from Georgetown University is cited, pointing out that, yeah, it's encouraging, but potentially quite fragile.
Fragile, okay.
Because the really fundamental issues, the ones that have fueled these tensions for years, they haven't gone away.
Like what specifically?
Well, the core stuff. Ongoing concerns about technology transfer, those big industrial subsidies China gives its companies, and data security issues. Those are still very much on the table.
Right, the structural problems. So if they don't make progress on those deeper issues in the next 6 months, what happens? Well, the big risk, as Professor Rothman apparently highlights, is that the tariffs just snap back.
Ugh, back to square one, or worse.
Or potentially worse, exactly. If the negotiations stall or fail, tensions could easily flare up again, maybe leading to even tougher restrictions. So those talks scheduled for next month in Geneva, they are absolutely critical.
Everyone will be watching those, I imagine.
No doubt about it. The global spotlight will be intense.
Okay, so let's just quickly recap. Big surprise move. U.S., China, temporary 50% tariff cut, effective now, last 6 months.
Right, the Tariff Truce Pact.
Aimed at cooling tensions, opening space for new talks. Markets liked it. Businesses seem relieved for now.
Mm-hmm.
But, and it's a big but, those underlying issues, tech transfer, subsidies, data, they're still there. Unresolved, making the whole thing feel a bit uncertain long term.
That sums it up perfectly. And this whole situation, it just really throws into sharp relief how interconnected everything is, how these disputes between the two biggest economies ripple out and affect businesses, supply chains, and potentially the prices you pay for things.
Absolutely. So here's something maybe for you, the listener, to chew on. Given these deep-seated issues that remain, what conditions do you think are really necessary for this temporary truce to actually evolve into something lasting, something stable between the U.S. and China?
Yeah, that's the real challenge.
It's clear just pausing tariffs isn't the whole answer. It really makes you think about the complex mix of economics, politics, and, global relations involved here.